Guess who? It's me again. It's Phil Spencer, and we are talking property. Thank you so much for tuning in. Really hoping you're finding this podcast useful and interesting. We are talking all things finance related to property, and we're working with our friends at Trussle.com. And today I'm with Orla Shevlin and Tom Atley, both from Trussle. They are mortgage advisors, and I wanted to talk to you guys about the mistakes that people make, things to avoid doing, because you guys must see it all the time. People, it's complicated, and I know as a mortgage advisor there's a lot of variables, there's a lot of moving parts. You've got to assess every individual's unique circumstances and unique requirements and give them advice accordingly. But what are the kind of the key things that people should avoid if they're not working with you guys at Trussle? They're trying to do it themselves. What should they avoid?
I'd say firstly, not having a good idea in terms of the maximum mortgage amount that they can get. So if you went ahead, put in an offer on a property, you had your offer accepted, and then only then you're looking at your mortgage options, you potentially setting yourself up for failure then if you're not.
Well, that kind of person has obviously not looked at the Move IQ website.
Obviously.
And taken all the advice about preparation is absolutely key in advance. Yeah.
Yes, definitely. So speaking to a mortgage broker, they can tell you maximum mortgage amount before you start going out and looking at properties.
Yeah.
So you've got a good idea of your purchase price that you'll be looking at.
I just wanted to take a moment in the middle of proceedings here to say a very big thank you to our friends at Trussle.com. They are the sponsors of the whole series. Trussle were the first online mortgage broker, and they've indeed since been voted the best mortgage broker. Not just online, but the best mortgage broker. They are a hassle-free, fee-free way of getting a mortgage, and indeed they are the only broker with a 5-day speed promise. What about people who are self-employed, or freelancers, or contractors? Because that seems to be an increasing part of society.
Yes, definitely. So mortgage lenders will lend to you. So they will lend to the self-employed, lend to those who are on contracts and things like that. Speaking to a broker, they'll be able to find the best lender based on your circumstances. Yeah. So when you're kind of limited company directors, some lenders are looking at salary and dividends, that's how you pay yourself, or others will look at salary and net profit. So you want to speak to your accountant and gain a good idea of your figures, gain those 2 years' worth of company accounts that lenders will be looking for. So then you can put them to your broker and they'll be able to advise your maximum mortgage amount. And they'll need those documents for application as well.
Would you say that's got easier or harder over the last few years? Over the last 5 years, let's say?
It should be easier.
It should be easier, shouldn't it?
Depends how good your accountant is. If they come back to you, their response times and things. But
I only asked that because sort of 5 years ago, I remember I work in TV and there's everyone's freelance, and people were having an absolute nightmare trying to get mortgages. But nowadays, it seems the powers that be in the banks and the lenders are more au fait with it. They're more used to it, more used to assessing it.
I think there's more standardised documentation as well, so it's a lot easier for lenders to see what you're actually earning. I think a few years ago, if someone was, well, not a few years ago, 5+ years ago, if someone was freelance, you'd have all sorts of invoice and contracts everywhere, all around the place. But now, there's just a set defined tax calculation document that you get from HMRC that says I earned this amount last year, which was made up of X amount of employed income, X amount of freelance, X amount of self-employed, and that's the headline figure that we use. So if you're looking to be as tax efficient as possible, which a good accountant will sometimes do, it doesn't always mean you're going to get the best mortgage. So you need to speak to your accountant and let them know beforehand.
So you need your accountant on side 6 to 12 months before you apply for the mortgage, if you're freelance, if you're running your own business, because you need the accounts to sort of satisfy your desire not to pay too much tax, but also your desire to get a mortgage.
Yeah, it's always important to speak to an accountant or tax specialist before doing this, because they're qualified to give that sort of advice.
Got it.
I would recommend speaking to your accountant, tax specialist. Mortgage broker isn't able to advise on that type of thing.
Debt would be a big cause of concern for people to carry, or indeed for lenders to be sort of learning about. But debt is part of life nowadays, sad but true. How are people best to kind of deal with that topic?
So it's all very much dependent on how much debt you have. If you're kind of using credit cards little and often, then great. That shows you're managing your finances. If you've got debt more than your level of income, then lenders will get concerned. They'll have their debt to income ratio that they'll be assessing. And so ideally, you don't want to be kind of going to the credit limits on credit cards and things like that. So it doesn't look very in a good light that you can manage your finances well. So if you can pay down some of those debts, then great.
Okay.
Some lenders will even, if you've got savings that maybe you don't want to pay off all your credit cards, you've got credit cards on 0% or something like that, you can advise that those credit cards will be cleared by mortgage completion, but you need to evidence the savings
That's
that you'd be
interesting.
able to do that.
Okay. So you can basically you can give some kind of assurance promise that those debts will be cleared.
Sometimes people don't want to clear them all just because the mortgage offer is not approved just yet.
Yes.
But then it will be a stipulation that that debt has to be cleared, and a lender can check that before completion.
And if they weren't cleared, then they wouldn't provide the money and completion wouldn't happen. And
Yeah,
that
so
would be
it would be
disaster.
kind of
Yeah.
a caveat in the
Yes.
mortgage offer that would be cleared.
I've never heard of that before. That's really interesting. Tom, we've talked in previous pods about all the challenges that are faced when people are applying for mortgages, and they don't always get it right. If you're doing it themselves, rather than using you guys at Trussle, there's a lot of information to put in, and sometimes it doesn't all tally up. Sometimes you forget something. Sometimes you've moved house. Sometimes it spells your name differently. What happens if you end up chopping and changing?
We all make mistakes or forget to say something. It's not the end of the world if you need to go back to your broker and reiterate something for your lender. It's when it's pretty obvious that it's being done maliciously or dishonestly that's an issue. So if you're making lots of different mortgage applications, that is going to have an impact, because every time you make a mortgage application, a search gets registered on your credit file. So if you're making 5 mortgage applications, that 5th lender is going to see that you've made 4 applications in the last 6 months potentially, and wonder why that is. So it's best to avoid speak to lots of brokers, but it's best to avoid putting in lots of different applications and making one application yourself concurrently, because the lenders can see what's going on there.
Okay. Orla, I've heard you talk in the past about not being able to rely on a mortgage offer until actually it's completed, because they can change their mind. Can you just expand a bit on that for us?
So your mortgage offer will be issued by the lender, and there will be still some time for your solicitor to deal with the paperwork, or maybe the person you're buying from to find their new property. So I would say avoid large purchases or making any kind of late payments on credit cards or missed payments on utility bills, purely because at any point the lender could potentially carry out another credit check just before completion. And if you fail that credit check, they could withdraw the mortgage offer.
Have you ever seen that actually happen?
Yes, lots of times.
Really?
So it can even be the simplest thing. If, say, your mortgage offer is expiring and you've still not completed on your purchase, we go to the lender to extend that offer slightly. They'll do the next credit check, and then you've gone into your unplanned overdraft the month before. You no longer meet their credit score requirements, and they can withdraw the offer on that basis. So it's completely innocent. That person wasn't wanting to, they were wanting to put as much deposit and savings aside towards buying new furniture.
And they've got their mortgage offer.
And they had their mortgage offer. They felt they were safe. But things can happen until you've got the keys for that property. You're not safe, essentially. Not to put fear into you, but
not much.
It just kind of try and keep your circumstances at the point where you applied for your mortgage application, because the lender, essentially, when you apply to them, they take a snapshot of your circumstances at that point in time, and ideally you want that to be the same snapshot once you're kind of getting the keys for the property, just to be sure, on the safe side. So no kind of large purchases, missed payments and things like that.
Try not to change jobs as well. We've had that before, where someone's taken a lower paid job once they've got their mortgage offer, and therefore their income's not the same. And if the property falls before completion, so if that property falls through, or as Orla said, we need to extend a mortgage offer, but your salary is 20,000 less than it was when you made the application, that is going to create all sorts of problems as well.
Goodness, there's a lot to think about. So, just so I've understood that correctly, say you got a mortgage offer on a particular property, but it had a long completion date, it didn't complete for 6 months. And you changed jobs during that 6 months and you earned 20 grand less. Would they run a credit check on you before completion and actually send you the money?
It's worth anticipating that they will, yeah. because you don't know what might happen until you move into that property. If it falls through, the vendor pulls out, and you've got to start again from scratch. You've got to start again from day one.
But ultimately, if you're on a lesser salary, you might struggle to make that mortgage payment.
Yes.
So should you really be taking that mortgage on?
All sage advice from Orla.
You've seen it all.
Yes. Great to see you both. Thank you so much for your time. Really useful stuff. It is a bit of a minefield. And there's a lot at stake. It's grown-up stuff, taking on these large amounts of money, but it's a really exciting time to be buying your own house. I always think particularly for first-time buyers, you only get that once. You bought your own piece of England. Fantastic. Good to see you both.
Thank you.
Thank
Much
you.
appreciated. A few words of warning. Your home may be repossessed if you don't keep up repayments on your mortgage. You may have to pay an early repayment charge to your existing lender if you remortgage. Individual savings may vary, and terms and conditions can be found at trussle.com.